Good day, Jeffrey Friedman, Senior Market Strategist, RJO, with my comments on stock index futures. Today, September 5th, the beginning of September, or the first week done in September. Word of the day, and I always give you the word of the day, we're going to go with employment because that was the biggest report that came out for the month, and it came out today. And it was very disappointing, in my opinion. But is good news bad and bad news good in America or economically globally? We'll get to that in a minute. Let's review last month as a whole month goes and a quick review of the year. Now, we're in a 5-year bull market. We're near the high, and we made new highs as of the month of August. And for the year, before this report came out, we were basically up 8% for the year in the S&P futures. We were up 3% in the Dow, and we were up almost 10% or 9.5% for the NASDAQ futures. Now, I've said that last year, we were up over 30% in the S&P for the year of 2013. So, I mean, you can see that we're up almost 200% for a 4 or 5 year bull market. That's the review. Economic is growing modestly in America. What's fueling the market in the bull market, and the trend is your friend? Probably more of Fed intervention than anything else. We've been stimulating, and Europe is taking our cue. They cut their rates this week. They're going to do a bond buying, maybe not government bonds, but some kind of bond buying. They are going to put a floor or support to encourage more lending over there. They have a weak economy. China has a fairly weak economy. Japan has a weak economy. So we have a lot of different central banks helping global economics. But in America, we're the strongest man standing, and we're in a 5-year bull market. The trend's your friend. Let's take a look at some of the numbers on the technical side. Now, when I say that our economic report today, non-farm payroll, was bearish or disappointing, we were looking for over 200,000 jobs created. We got about 125, 140. That's a disappointing. Unemployment, we were looking for an uptick, meaning more people that were on the sidelines that were not looking for a job would start to look for a job. But we didn't get that either. We got a 6.1, and that was disappointing as well, because the chairman of the Federal Reserve is always talking about slack in the economy, slack in people participating to find a new job, more people trying to get a job, and they were looking for that number to jump up, which would indicate the slack is narrowing. Keep that in mind when analyzing the numbers. Now let's go to the technical analysis, and in my opinion, we're near the all-time high. We've pulled back just slightly. I think that bad news here is going to have the thought that the Federal Reserve in America will not have to raise interest rates as fast. So we bought an extra month. We bought an extra 6 months. So, of course, that should, in my opinion, if I believe that in the last 24 months, the Federal Reserve has helped the stock market at least 50, 60, 70%, encouragement, because it's the best game in town for the moment, keep that in mind, then what would change my mind on the charts? What would change my mind is 1940, 1945 in the September contract of the S&P, or you should be rolling or thinking about rolling into December future contract. On the way up, I'm looking for 2025 basically on the September contract as a number to reach. Keep that in mind. Now, minor pullback, 1970, around that area, should find support for new buyers. The trend's your friend. A close for the week or 2 days in a row under 1940 would change my mind. Good luck and good trading. Futures and options on futures may involve substantial risk and may not be suitable for all investors.